More than 12 million subscribers lost by Disney Plus in the last quarter. More than 600,000 subscribers from North America alone lost over the last 6 months. 100,000 subscribers per month fleeing the House of Mouse and their digital platform. Why in the world, then, is the stock going up, seemingly? Well, we're not here to give you financial advice, but we are here to walk through the philosophies that undergird what is happening with the Disney stock, its value, and what investors out there are thinking. Hello and welcome, ladies and gentlemen. It is a joy to share our time with you each and every time that you click on one of these videos. Welcome back to the WDW Pro channel, where we endeavor to explain entertainment, keep you ahead of the culture curve. We indeed think that is very important, as when we examine entertainment, we examine what people all over this great, big, beautiful world are interested in. And therefore, we think that tells us what's going on in the world. It's not just us taking a look at fun little movies and shows. We think it's much deeper, more broad than that. And folks, we're glad that you agree. If you like content like this, consider clicking the like button, share, subscribe, and click it, stick it to the algorithms. It's the notification bell. We're here today to talk about the Disney stock. However, we are not here to give financial advice in any way. If you'd like financial advice, seek out a financial advisor in your own local area, someone who is reputable, credited, and in whom you can trust. But folks, we do want to talk about the philosophies behind why the Disney stock may be doing what it's doing. After all, that earnings call that we saw on Wednesday, no good when you're losing subscribers like this at the same time that Netflix is gaining. Well, it does not bode well for your streaming service. At the same time, Disney has a huge hurdle in buying Hulu, one that may be difficult to surpass, although they are on the hook to do so. How much credit, how much debt is Disney going to require to pick up Hulu? Well, all of this, including the diminishment of the parks, seemed to be adding up to a maelstrom when it came to Wall Street. Instead, we got a slight bump, a bump up. Now, we're not here to tell you that we are the absolute prognosticators of what's going to happen in terms of stocks out there. If we were, perhaps we would be competing with some of the big Wall Street companies. Instead, we're here to deliver entertainment analysis. But we want to explain the financials behind what perhaps is happening with the stock, with the investors, and what this might mean for entertainment and Disney going forward. You know, Disney is not short on brands that have had the same kind of damage that we're watching with Star Trek. We can talk about Star Wars. We can talk about Marvel. We can talk about Snow White, which we have and we may come back to in a few. Yeah, Pixar, down for the count, even though Elemental is having some significant legs, more than what perhaps we had originally thought. Still going to lose $100 million, but that's better than losing $200 million. Let's take a look at this, though, out of investors.com. This is Investors Business Daily. This by Harrison Miller. Disney rises on earnings. Password sharing won't skirt new Disney Plus price hike. Dow Jones entertainment giant Disney posted mixed results for fiscal quarter 3 results late Wednesday as it struggles with slowed streaming growth and high content costs. And by that slowed streaming growth, folks, what we're talking about there is a loss of more than 12 million subscribers globally. And in their lead market with the highest margin, North America, they've lost more than 600,000 subscribers. So well over 500,000 subscribers in the last 6 months. Wall Street, however, is reacting in a different way than you might have anticipated. Disney-owned ESPN inked a deal with gambling company Penn Entertainment. Disney stock rallied in after-hours trade. That talking about Mickey Mouse now into the gambling business with ESPN Bet. Disney announced a 6% decline in adjusted earnings to $1.03 per share, while revenue rose 4% to $22.33 billion. Analysts had expected earnings to fall 11.2% to 96 cents per share on 4.6% revenue growth to $22.49 billion. Now, I think the big takeaway here is that although we covered this, I think, accurately yesterday, we're seeing a bump out of investors who apparently they like what they saw, at least to some degree. However, Jonas, you had a different take on this. You had a position that perhaps this is not due to any kind of glee around what was announced from Disney. But Jonas, give us your take about why you think we see a bump today, whereas I think all the news yesterday was bleak.
Well, gee, you make me sound real smart. I think that there's a bump because there's a lot of attention and there's probably a lot of trades going on after the call. They released everything after the bell closed, so there were no more stock trades going on that evening. Also, they seem to be projecting stability. And there was one more thing right at the end of the call. Bob Iger, I'm pretty sure I heard him say that they are not being bought by Apple.
That's big.
But
and you think that's? Do you think that?
No, I think that everyone emphasized the first part of that sentence and completely ignored the regulatory part of that sentence.
Right. Well, Script, let me get your take on this, because Disney is in a precarious situation on a number of fronts when it comes to both their stock value as well as the strike. And so you've got Iger, who has angered the unions, and then Iger does this very strange thing during the earnings call yesterday in which he essentially does a mea culpa to creatives, something that is extraordinarily rare to ever hear in an investor's call. Then you've got the situation where you have a Disney princess essentially out there on the picket line saying that she deserves residuals for every moment that she is on screen, anytime, anywhere, forever, ad infinitum. And then, of course, too, you've got Disney also stepping in it with this artificial intelligence issue. So, Script, walk us through, what do you think are the danger points for Disney going forward, as they seem to have come out, at least for the moment, unscathed with their latest earnings report?
Well, I think part of the bump is attributed to the fact that investors know that there's money to be made in gambling. And so if Disney's now associated with that equates to that reliable source of income. Because again, with gambling, the house usually tends to win more often than not. Even when you're gambling on sports, it's at best 50-50. And if you don't understand how to do splits or what the spread is, you're going to make a lot of money on those people. And there are plenty of them out there. With regards to Disney, especially the platitudes they were taking to the creatives, and their investment in AI, Disney is essentially prey to big tech right now. They're the only studio that's actually gone out of their way to really say that we're really exploring AI. They're the first ones to actually admit to doing the opening credits to Secret Invasion by hiring an AI team. And I think they probably are very well aware that if they invest wholly in AI and use that to replace essentially directors, actors, and writers, they also know that means they no longer need to hire the crew. They no longer need to pay for car services or laundry services or catering services that the state of California has a big investment in, because Hollywood pays for all of that stuff. It has a massive ripple effect. And I also think that that the creative side of things, especially with regards to Rachel Zegler's comments, they may not have been worded as best to make people on their side, but she's not saying anything wrong.
Right.
She has put in the work. A company is redistributing that work for eternity, essentially. And so long as she is alive, she should be properly compensated to that. That is part of the agreement she made. That's part of the minimum basic agreements across actors and writers. Because again, Disney may have the money, I mean, nowadays at least, Disney may have the money to pay for these stories, but they don't ever have the wherewithal to come up with them themselves. And they're trying to solve that problem with AI. But as I've reminded a lot of people, if you think AI is going to write better than what you're getting now, I've got a bridge to sell you, because what is being written now is at the mandate of what the studio execs want it to be written. So if you don't like your propaganda being injected into your Disney properties, guess what? Instead of a writer getting paid to do that, it's now going to be an AI programmed to do that. Because it's not the writers saying, I'm coming to Disney with this great propaganda idea for their intellectual property. It's Disney saying, we think that Star Wars needs a lot more female characters. We're going to put out an assignment call to the short list of writers that we know that can write female characters, and they're going to pitch us. And the one that is closest to what I have in my head is the person I'm going to hire. And a good writer will actually see that as a big flaw with regards to an IP, and they will never get hired by that producer, because that producer is like, well, you're not in line with my vision for what I want this story to be. Therefore, I am not going to hire you. That is why I'm going to go and hire Damon Lindelof, because he's the one that kind of goes for that. And then I'm going to fire him because he didn't actually do any work. That is the situation at hand. So that is one of the things that worries me a lot. Because if for a company like Disney, they've purchased a lot of their value, and that's also a big flaw. Because they've purchased their value, they haven't actually built any value, and so they have.
One of the things that we've witnessed.
I can think about at this point right now.
One of the things that we've witnessed is, of course, during the earnings call, Bob Iger on the hot seat saying that he's actually going to have to step in with the studios to fix what's going on over there. This is rather humorous, because Bob Iger is essentially the guy who put us in the spot we're in. But one of the things with the studios, and you never hear Disney proper talk about the box office during an earnings call. The box office is small potatoes compared to so much of the other parts. But Kara, we've watched Barbie dominate the box office. Disney has not. The Little Mermaid has not caught on. Of course, we're watching to see what's going to happen with Wish. I suppose that you could call Elemental sort of a rom-com out of Pixar that essentially is going to lose $100 million as well. What does Disney need to do? They've ran off the male side of things. It seems like the female demographic is out as well in comparison to Barbie. What do they need to do to bring back the ladies?
I think they need to focus on kids, go back to their roots. I think that's where they've really been failing lately, is trying to really cater more towards like the adults that are watching these movies along with the kids. And by going too in depth with them, I think if they really go back to what they knew could succeed, I think they would have a much better choice, or a much better chance at succeeding, and being able to hopefully recuperate some of the failures that they've had in the last, these past 10 years have been rough for Disney, especially the last 5.
Folks, we're not sure what's happened to Tom. He is.
I got jealous of Kara because she had a fuzzy blanket. And now I'm under the impression if Disney just gave out fuzzy blankets,
wait a minute,
they wouldn't have a problem.
Does everyone on this panel have a gray blanket that they're just pulling out right now? What is
fuzzy
going on?
No. Rock.
It's 100 degrees down here. Heck no.
I know. I'm like a steaming demon right now. I'm just trying to. The joke's done.
Let's just open the panel then, folks. Are you all surprised, I suppose, at the kind of subscription losses we've seen with Disney, and then the apparent vigor that investors still have for the company in light of this? And let me say this too, and I'm known for giving long questions, so I do apologize, but when you look at the way the stock price reacted in the last 2 years, that thing was bolstered by the fact that everyone believed Disney Plus was going to take off. Now it hasn't, and yet the investors, at least for the last 24 hours, are not hesitant to jump off the ship. What's going on here?
I mean, we are talking about like $3, and they're staying around 90. This is, in my opinion, this is actually pretty close to the vibration of the stock price over a short period of time. They've been at 90 within the last month even. So I'm not saying they're saved. Obviously, it's good for them that they have a little bit more valuation here. They need to have a stock price much higher if they want to avoid handing over the figure that we keep throwing out. Okay, they probably will have to buy Hulu, the remaining 1/3 of Hulu, for about $23 billion. That is how much Comcast valued it at, that 1/3 at about 2 years ago, and it's probably gone up since then. That represents right now, based on market capitalization, sorry to get nerdy here, about 14% of the entire value of the Walt Disney Company. If they can't come up with the cash, which they've got $2 billion of free cash flow right now, roughly, if they can get loans, okay, that's great. Those are kind of killer right now with the interest rates how they are. Anything left over will have to be financed in an equity arrangement. That is larger than any other institution that owns any part of Disney right now. I think BlackRock, they were talking about 5%. Anybody else have those figures offhand? Pro?
BlackRock, say it again.
How much of the Walt Disney Company does BlackRock own right now?
5%, along with Vanguard.
Vanguard's at 6, right?
BlackRock is
right. So
6 now.
Okay. Collectively, like Vanguard, State Street, BlackRock, they all owned 25%, and Disney is institutionally held up to like 65%. So that 35% there is all the people that call into the annual shareholders meeting and want to talk about annual passes and the small stuff. That does affect the normal customers, but it's institutionally held, and this would dramatically. I don't think the Department of Justice would allow Comcast to own as much of the Disney company as they would have to hand over in order to pay for Hulu.
One of the crazy things that we're watching is, and this is happening to companies across the board in terms of streaming, but Disney, this has just happened, so we have the data. All right, folks, did you enjoy this conversation that came from the Pro Show Live this past Thursday? If you did, consider clicking the like button, share, subscribe, and when you click it, you stick it to the algorithms. It's the notification bell. We covet your comments, folks, so please drop one down below. We care about what's on your mind, and we would like to know, how did we do this time? Did we get it right? Did we get it wrong? Do you think that the investors are thinking something else besides what we're talking about? Perhaps you have a novel idea that we've never even considered. We read your comments. We often respond, so drop one down below. And folks, if you'd like more of this type of content, well, consider becoming a member of the channel. For just the price of a soda per month, you can be an access to all kinds of exclusive content, including the full archives of all the WDW Pro Show Live episodes we've ever done. Folks, wherever you are and whatever you're doing, as we always say here, keep learning, keep growing, and keep having fun.